guys, Shami here with another video on the NZDayTrading101. So today I'm just going to talk to you about a stock that's been just exploding higher this week. And a lot of you people that have been watching the markets, you already know what stock I'm talking about, and it's Pushpay Holdings. So Pushpay Holdings, they had a really strong move upwards in the past few days, and what we call this type of move is when a stock goes parabolic. So when a stock goes parabolic, it just means that the stock is just shooting straight up, and I'm going to show you that stock right now. So I've just typed in PPH. So let's have a look here. Cool. And look at that. Look at that. That's what you call a parabolic move higher. So this is a very unnatural move because nothing ever nothing ever goes up in a straight line and doesn't come back down. So as we can see here, it's just way outside the Bollinger Band. You can see that candle there and that candle there. So it's beginning to just be become so overbought that it's just the price has just gone up way too fast. And the reason for a stock to go parabolic is when there's too many buyers and not enough sellers. So why would people want to sell when there's so many buyers behind it and the price is still going up? So what's going to happen is when the stock starts to lose a bit of volume and it starts to show some sort of topping action, as in it'll form like a lower candle or even break the low of the previous day, which is like 643. So that's when we'll probably start to see huge retracement back to around about maybe 580, or just depends. Because what happens is when people start selling, then the selling really tends to just drag the stock down with it. So just going to explain this move as well. So this is quite a good stock to trade. So what happened is it's been in a consolidation for a long time, and it's had many earnings announcements. But this particular earnings announcement here, this is what kind of triggered a lot of buying. And as you can see from the volume down here, this simply means that with the upwards move, there's lots of volume behind it. So it's actually it's a true move. It means that it's not a stock that's basically gone higher and had minimal volume, because then a stock like that would mean it would probably just come back down. So this one has some pretty good volume behind it. And the reason why it went up was because of its earnings announcement. So they had an earnings announcement on May 6th. And as you can see on the earnings announcement, it opened up. So the previous day it was closing at about 455, and then it basically opened up here 13% higher. And as soon as it opened up, at the end of the day it closed higher, and the next day it opened up. So this is what we call a gap up. So basically the stock gapped up another 5% from the previous day, and then the stock gapped up again another 2%. So basically, as you can see, the huge move has happened, and the stock is beginning to kind of lose its traction forward. So we'll probably see a little bit of a pullback, just to have a bit of retracement, because it hasn't had time to. So when a stock goes up, a stock needs to go up naturally. Like as you can see from here, the stock's going up naturally. It's got a nice tight range, and it's just going up nicely. But as you can see from here, the stock's just going parabolic. It's just nothing moves like that. It's very unnatural. So this basically means the stochastics here are overbought. This price is outside the Bollinger Band, and all this shows me is that it's due for a pullback. So this stock could keep going higher. So it's really important that when a stock breaks that sort of previous candles, what's this, 636. So when the stock kind of breaks that previous candles low of the day, that's a good signal that the stock is probably going to move downwards. And when you're in a stock like this, it's good to have a trailing stop. So having a trailing mental stop is really good. And Normally what you'd want to do on a trailing mental stop. So for you people that don't know what a mental stop is, a mental stop is basically in your mind a price where you're going to get out. So in this case, when the stock is going parabolic, it's a bit different to trade. It's just going up and up and up. We want to capture as much gains as possible. So that's why for you guys that got in here or got in here, make sure that you ride out these gains as much as you can. But at the same time, when a stock does start to go down, that you want to make sure that you get out so you don't want to lose those gains. So there's one thing about making gains and one thing about uh, like you want to hold on to your gains. So basically, you don't want to lose your gains. You don't want to be up 10%. All of a sudden, 5 days later, you're happy as you're up 10%, and it just drops down and you just lost your 10%. It's like, what the hell? I just wasted 5 days looking at charts for no reason. So, um, yeah. So hopefully this one continues higher. So 650 is the next sort of so you want to make sure it breaks the last stock's high of the day, which is 646. So if it doesn't break 650, then it's probably likely that it's going to start to go down. So, and another way, so there's two ways you could trade the stock. So as you can see, the run up to earnings. So we saw a bit of a run up to earnings here. So this is where you can trade a stock on a run up to earnings. If you're trading a stock a day before earnings announcements, to me that seems like gambling because you don't actually know if the stock's going to actually have a blowout earnings or not. Because what if you're in a stock over here? So this was the day before, right there. That's the day before earnings. So what if you're in a stock right there and the next day it gaps down right there? It gaps down to 326 and you're holding that stock. You're going to be down 28%. And the thing what we want to do as traders, we want to manage our risk. I mean, if you guys want to do that, if you guys want to trade before earnings and gamble on the earnings announcement being a really good earnings announcement and just flying high like this one did, then you can. Um, if you want to do it on like low amount of money, if you want to take that risk, if you want to gamble, then you can. But I personally wouldn't. A good way to trade this is trade the earnings announcement run up. So the run up to earnings. So basically, if you know like a 2nd April to, it's probably a bit too early to trade, but yeah, here it was forming a sort of a range, and I was kind of expecting that earnings announcement to come out. So a good way to trade this is probably after the earnings. So you probably want to be trading from here onwards because if you got in a stock around here somewhere, then you could still make about 21%. So if you guys with your shares account, so I've actually found like a good amount to use for shares is probably $1,000. I mean, if you can make these, if you can keep your losses at 2% and make like 10-20% gains by swing trading stocks, then I reckon that's a really good way for you guys to kind of get into trading and make a side income like that. So I just want to show you guys. So I'll just go to this day here. So I'm just going to go to the 5-minute chart. And I'm going to show you the trade I did. So I wasn't successful in my trade when I first traded it. So the earnings announcements came out. Here's a really good earnings announcements. I was expecting a sort of a continued move higher. Sorry, change my charting layout. Yeah, so basically I went in here and I went in at 5:30 and I was expecting a move sort of higher right off the get-go, but it didn't come, and the reason for that probably was because that was already up so much, and so it probably wasn't a good move, but that's okay because I said I'll cut my losses quick, so I was ready to cut my losses around about 5:15, something like that. And what I did here was 5:30 came, I entered my stock, kind of retraced back down here, and I was, oh, sweet, I'm probably just going to have to cut my losses. Then it started to go up again, and it started to test that sort of 5:30 range again. And for around about, uh, so for the next 1 hour, it just couldn't break that 5:30 range. So I was like, all right, sweet. So this is probably not a good day trade. I'm not going to take this as a day trade. I'm going to get out. So I basically just got out and just paid basically the fee, $60 or whatever. And then I was right, and I couldn't break that 530 level. And then it just started to go down. But that's when I was off the computer. I don't want to sit in front of the charts all day, so I like to play the opening because you don't want to be stuck to the computer either. You don't want to be stuck all day and just kind of watching the charts and not really, you're wasting your whole entire day basically. So if you want to kind of get some quick gains at the start of the day, and if you can't do that, then me personally, I usually start to get out. So then you have the end of the day runners, and then so what happens is this is what you call a long day consolidation. So anyone who set alert, so I don't do this, but if there's a level like this that you want it to break, after it breaks that level, look, it just started going higher there. So anyone who got in over here because it broke that 530 channel, could have made about 3.36%. But this was a good day trade anyway. Sorry, not a day trade, a good swing trade if people wanted to trade it. It didn't shape up in my usual shape that I like to do is the whole if there was a chart, I like a stock to kind of go like that, higher, and then hold its gains all day. It didn't actually do that shape. So as you can see here, the shape it did was kind of go like that, went up here, and then kind of. So it's a bit of a different shape, which is all good. At the end of the day, the stock finished actually. When a stock holds most of its gains on the first day of earnings, it's highly probable that the stock is probably going to open up higher and continue higher the next day. And that's exactly what happened here. So anyone who wanted to take a swing trade, for people those with small accounts, and you see a stock that's kind of flown higher, but it's kind of finished strong at the end of the day, it's probably a good swing trade. So you can probably enter in right there. No, failed at my error. Never mind. Cool. So that's the first day after the earnings announcement. Now we got to check out what the second day looks like. Here's the second day of the earnings announcement. So this is something people could have traded. Here we go. So we saw 580 it opened, and it just made a huge move high, about 7.5%. So anyone could have, So anyone could have day traded this for around about a 7.5% return. Unfortunately, I didn't capture that price action. So open up 580, continued higher, and went to about 630. So I was looking for that sort of price action over here, but it didn't happen. So this chart here, as you can see, it formed the same sort of a pattern that we wanted to see. So as we saw that kind of, it did dip down a little bit. At the end of the day, it kind of held its gains all day, and that's when you could have taken a swing trade here. So looking at the market depth, the reason I didn't day trade this, because there was so much. When you look on the market depth, there was so many sellers. There's so many sellers taking up and not enough buyers. But even though there were so many sellers taking up on the sell side, this price still continued to trend higher. So I usually day trade using market depth, and market depth was showing me that there was more sellers than buyers. However, buyers kept buying this up, and when you had a 7% move. So that's when I need to go back and actually review how I could have traded that, because maybe market depth is an option. Maybe trading the charts is probably better, but I like my market depth, or using market depth in conjunction with the charts. So this is what is the main thing about day traders, is that you want to find out what works for you. You want to keep testing things. If something's not working, because your strategy or a certain way is not always going to work. It's not always going to work for every single stock. It's not going to work for particular stocks, and in time your strategies is not going to be valid anymore. You just need to change it up. So the market's doing something else now. So you just need to keep figuring it out what works best for you. So. But the main thing is, as long as you cut losses early, you don't want to take deep losses. Avoid deep losses. That's all you want to do. If you can avoid deep losses, then you can stay in the game for a long time, and it's only accumulate wealth in your share trading account. So here we go. So I actually took a trade here. I remember now. I actually took a trade over. I took a small trade over here. So I saw it was so super overextended. So I actually never seen a parabolic move like this. Like, yeah, in the NZ market, I haven't seen it as long as I've been trading. So I actually took a trade into the day over here because it was holding its gains, and next day it opened up higher. Opened up higher there. It kind of went consolidated down here, kind of like there, and as we saw it. As we saw here, again, the stock tried to sell off. So this is an important thing why stop losses, I don't agree with stop losses, because you see these huge wicks. So anyone who kind of had the stop losses at like 630, like a proper set stop loss, they would have been stopped out maybe, and then it was a chung, and then back up. So this is the reason why mental stop losses are good, because um, you don't want to, this was like a 1 second candle flick. It just went down to 630, then back up. So that's why if you can see that the price is holding or at a certain level, if it's gone down to like 640, then, or whatever price you set your stop loss at, then that's okay. And here we go. So the reason I didn't sell my swing trade was that the stock actually ended up on high volume at the end of the day, and it still held all its gains. So stock opened over here, and it still is kind of holding all its gains. But and then as we sort of volume, there's still heaps of volume. We saw heaps of volume here, 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 here. It's starting to simmer off, so I'm going to be quite careful. On Monday, I'll probably have to sell the swing trade, but that's okay. So you want to ride it out as long as you can. So yeah, let's go back to the daily. Oops. Again, guys, if you look at this move, it's just a huge parabolic move. Nothing moves in a straight line. Um, So if you guys want to swing trade this, then definitely do, but make sure that you're very careful with it. Make sure that the stock finishes at the end of the day holding all its gains, and make sure that when the stock does start going down on heavy volume, or even breaks the low of the previous day, then manage your risks, cut your losses early, and if it starts to go up again, then you can always get back into the stock. So thank you guys for listening, and please smash that like button below. I really appreciate it. Subscribe to the channel for more videos. I'll probably try and do one video a week, just because we're coming off lockdown now, going back to ordinary life. Sorry, we're going to alert level 2 soon, hopefully. So, and I'll see you guys for the next video.